Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. In today's video we are looking at one of the dividend kings. Before we get to that, I just want to say, as you can see, the portfolio right now is 66,000. That is not the current value of the portfolio. The current portfolio value is 68,200. As you can see here, there's 2,000 plus in there, some which came from a sale, some which came from basically money that I put in. So right now we still have £2,666 left of the ISA account, which I need to max in the next exactly month. So by the 7th of April, a month from today, inshallah, I will be adding 2,666. So stay tuned for that, inshallah. If you haven't joined us on the Discord yet, please do so. It really helps the channel. Okay, you can make a small donations or whatever you want to call it, right? And you can join us on the Discord. So we have a private Discord. We're building up this, inshallah, to have a like-minded brothers and sisters to kind of share ideas on what we're doing in the stock market in the halal way, inshallah. So that's the plan. So let's talk about this company. This is one of the companies I've not spoken about basically for a very long time. I've always done like quick videos, but I haven't actually done in kind of like looked at the financials in more details. So that's what we're going to do first, and then we'll look at the Sharia compliance side of things, and then we'll wrap up the video. So I don't want to make the video any longer than it needs to be, but just today keep an eye on the markets today, because the Fed, well, basically right now the Fed chairman is right now being asked questions in the US Senate. So he's answering a lot of questions because the market went up in this morning. It was actually okay, and then right now it's kind of going in the red because he's actually said, oh, inflation might be even, interest rates might be even higher than they expected, blah blah. So he's basically talking right now. He hasn't finished, so we'll see what comes out of that. But that might give me an opportunity because, like I showed you early, I've basically got 2,000 something to invest in. Inshallah, one of these will go to a new stock that I want to add, inshallah. And as you can see, what we now only have 26 stocks instead of 27. So I got rid of another stock. I will explain. Don't worry about that. I will put that in the Discord tomorrow, inshallah. So I'll explain everything, why I sold that stock and so on. And then I will release a video the next couple of days. So I will, as always, let you know. The company that we're talking about is Apple Laboratories. This company, ABT, has basically increased its dividend for 50 plus years. It's been around for a very long time. Is the company, this company and AbbVie basically used to be one company. So they did a spin-off of AbbVie, if I can say the word. So they are in the healthcare sector, currently basically trading $101 per share. A year-to-date performance is almost 8% down. So we want to see if basically they have come down enough to even look at this company and then look at the rest of the financials. The 5-year return is 64%, which is quite good. Imagine if you owned this stock for the last 5 years, you would have had 64% plus probably total return, and that includes the dividends and everything else, right? EPS $3.93, market cap of $181 billion. So it's a big company, it's not a small one. Okay, it has a narrow economic mode and it has a beta that is way less than 1, which is quite nice because we want to. This is why some of these companies are called defensive, because they don't have two things that are going for them. Is they have a lower beta, number one, and number two, because of the nature of the pharmaceutical companies, the fact that when it's recessions and things like that happen, we need those, God forbid, if you need the medication, you're obviously going to get it, right? So that's another thing why they call them defensive. Now, PE right now is 25.72. The sector is 25.12. So not bad. So it's almost relative to similar to what's going on in the sector. The forward PE is slightly lower, and the 5-year average is exactly where the company is right now. So it looks like it's trading fair value right now according to the 5-year average, because normally what you're trying to do is find companies who are trading less than the 5-year average PE, which is quite easy. And you can find these things in Yahoo Finance and Seeking Alpha. It's easy to find these things, or even Vinvis, which is another company that I use. Price to free cash flow is right now 20, so that is not bad in comparison to the rest of these metrics. It seems cheaper on that sense. In terms of dividends, this is where this company shines, if you like. So almost 2% dividend yield. Latest increase was about 8.5%, and the 5-year growth rate of 12%, which is really good for this company. Annual payout is $2.04, and ex-dividend will be 13th of April 2023. So they must have gone already ex-dividend this month. They're probably paying this month and the next, last month or so. So ex-dividend is 14th of April. Dividend growth streaks of 51 years in a row. So this is why they are dividend king. Okay, so 51 years of increasing that dividend. Think about it. What happened in the last 50 plus years, right? We have recessions, we have wars, maybe this and that. Everything that happened, it didn't really matter to this company because they have enough cash. Remember, these companies do not just pay dividends because they like it. They pay it because they have the money sitting around. So they want to share that. They want to give it back to the shareholders. So for that reason, the fact that this company has been paying 51 dividend, increasing that dividend for 51 years, shows that how this is almost like a cash machine if you think about it. Because they had enough money to sort out whatever they need to sort, grow the business, as well as pay you and increase that dividend. They will pay and increase at the same time. So payout ratio is 36%, dividend safety 71% according to Simply Safe Dividend. And the free cash flow right now, we're looking at about $7.8 billion, which is really good. And then free cash flow yield is 4.4%, which is really nice if you think about it. We're looking for about 3%. So in terms of these matrices, which is especially these two here, free cash flow and free cash flow yield is really good. The dividend is safe. You're getting those $2. They have been increasing for a very long time. And the payout ratio is only 36%. That means that out of the net income, basically the money they keep at the end, they only spend about 36% of their net income to pay off, basically to pay us this dividend and increase it at the same time. So it's really good from that sense, okay? Profit margin is basically almost 16%, operating margins of 19%, return on equity about 19%, and then total return in the last basically 12 years, we're looking, like 10 years, sorry, we're looking at 12.6%. Okay, return on invested capital, which is another metric that I've added recently, which is very important to us investors, okay? And you want to see if the management actually do what they're doing with your investment and so on, and how effective they are. That's 13%. But revenue growth, compounding annual growth in the last 5 years is 13.7. Again, really solid revenue growth, okay? Current ratio is above 1, so that means the company has enough to cover that basically current liabilities or the next month, current liabilities and so on. In terms of estimates for the next year, it's about 10% growth estimated for the earnings to grow, basically about 10%. Then it's about 8%, which is solid. This is the type of business normally grows about 5%, 7%, 8%, and so on. Pharmaceutical is probably 8+%, okay? So it's really good. Current price, we've already seen this. And fair valued according to Simply Wall Street is $155 per share. They're saying about 36% undervalued at the moment. Fair valued according to a Morningstar is basically $104 per share. That's about 2%. So actually, I haven't updated today. So it's about 2% or so if you think about it. Target price 12 months from tip ranks is actually 123. They're saying it's got 21% upside. Again, 121 from Seeking Alpha, about 18.17% upside. And it is a buy according to Seeking Alpha. In terms of Sharia compliant, we're looking at about almost 100% in terms of interest, in terms of business activity. Interest-bearing debt just less than 10%, and basically less than 6% in terms of interest-bearing securities. Now, they have been buying their shares and then they started increasing for whatever reason. Maybe they had to acquire other businesses and whatever, or maybe pay off some debt, whatever they needed for that money. They used that money, and then since 2021 and 2022, they have been buying their shares. Now, I hope the company was not trading basically expensive at this time, because 2021 and 2022, especially 2021, things were very expensive. So I hope they were not buying, because I hate when companies are buying back their own shares when the stock is expensive. When it's cheap, buy as much as you can, retire those stock basically shares, because that gives us more of the business. So that every share that we own now becomes a little bit more than that. So it will be nicer if they were buying back when it was very cheap. I don't know, maybe 2021 it was still quite cheap in their eyes. Right, just quick things to look at in terms of the revenue. So as you can see here, that it looks like the basically the expectation is it's going to go down a little bit when it comes to the revenue. So that's a little bit worrying. So it will be interesting to find out the estimate. So, but when you look at they've been growing that revenue for quite some time. And when you look at the expected, so the estimates for the next December of 2023, by the end of this year, it will go from 43.67 to 65 to 39 point, let's call it 40 basically. Okay, then it will bounce back again to 42.17. So yeah, so you just need to look at it. Maybe they have a patent that's actually coming off, so maybe if that patent goes away, other companies will start producing the same product, or maybe there are other reasons. So you need to look into that if you're interested. And again, if you work in that sort of industry, you might know for some reason some of the reasons why that is happening. Okay, again, when you see the EPS has been growing, and when you look at the estimates, it also looks like this year, basically 2023, there's a bit of a decline. So one of the reasons I want to look at this company is everything else looks really great, but for this reason, because it's declining for a bit and then bouncing back, a lot of investors will sell it because they know straight away, oh, this year is not going to grow that much or whatever. So it's not growing as much as so if it's growing year on year, but it's not growing as much as the analysts wanted, obviously these guys will start selling it. So it might give us an opportunity as investors, okay, to look into the business and see if there's basically if there's good business for us to add to our portfolios and so on. In terms of dividend growth side of things, okay, if you look at history side, okay, if you look at the last 10 years, look at that, how much basically they've been growing every single year in the last 10 years. So this looks a really solid business, and as I said to you guys earlier, it's about 1 or 2% discounted right now when you look at Seeking Alpha, when you look at Morningstar. So overall, great business. It looks like right now is actually discounted a little bit, but maybe if I'll be honest with you, I do own quite a few pharmaceutical companies in my portfolio, so I'm not going to add this one yet. But if it comes down maybe another 5-10%, I might look at it and maybe add it to the family portfolio or something like that, because in this portfolio I do already have J&J, I also have Merck and so on, and they're doing really well, these companies. Although J&J, I'm going to do a video inshallah soon, J&J, talking about J&J. So this is the one of the first few videos that I will be doing inshallah this week. Work has been really busy, so inshallah I'll do my best after work to basically put together a few videos for us inshallah. If you can join us on the Discord, that would be absolutely amazing, so you will know exactly the buys and sales. Sometimes I don't post a video, but I might post like what I'm buying, what I'm selling inshallah on the Discord and the Patreon account inshallah. That's it from me today. Have a wonderful day. Assalamu Alaikum.